Welcome to TradeTheMBI.com. This is John. This report is for the 7th of December. Well, a day that will live in infamy for those that actually know history. I don't know if they teach that kind of thing anymore, but needless to say, for those of us that remember the past and or history, we can see a lot of these repeating patterns from, well, just the world as well as even in the market. So as we've been pointing out with the MBI and Magenta, continuing its fade, a little bit of softness, but still holding right around this same algo level, right at that 45 range. Been pretty clear. What we have seen is a noticeable increase in our MBI white, and we actually have a meeting of MBI white to magenta. However, DOC still signing under red. And this is an interesting one because usually you need a cross above with the steel and then back below to have a significant level of retraces. Why I've been saying that overall the bullish trend hasn't changed. We're still going to see intraday weakness that we can take advantage of from a trading standpoint. But when you look at shakeout gold, and that's still rising. So the reality is we'll probably get potential fill all the way down to that positive extreme, but more likely you still have to even get to the 76. And when you get this degree of move above that 76, you get this play back and forth, and you're going to at some point get a little bit of a fill back in between before another run, unless we can get a DOC spread that matches with our MBI reading, and that would be the strongest indication that there's going to be more of a move. However, decent increase in volatility uh, relative to what we have been seeing, at least from a range standpoint. From an NQ standpoint, you already had the MBI white cross above. So that NASDAQ weakness, which obviously represents a big portion of the big players, when they're weak, and we're seeing a lot of rotation out of a lot of those big players, and that's been enough that's been pretty much keeping the market in this massive acceleration. And that's not going to change anytime soon. It's just a question of, do they have any more of a significant retrace? So the 76 here on the NASDAQ becomes key from that standpoint, and already evened out with our, we had the DOC spread here slightly already on the NASDAQ. So a bifurcation between the two markets. And I think that provides even more intraday opportunities, or particularly from a NASDAQ standpoint. Certainly those are the stocks intraday that certainly can be attacked from a short standpoint relative to the long side of most other things. And this becomes an interesting one because now Treasury is getting way out of whack to where rates are now. You've seen a huge explosion above where the Fed was, and now you're seeing the market saying that the Fed has to cut rates. Uh, Again, strange because bond market's been wrong so often now, and we've been seeing these moves that go counter to it, and they always force corrections. So it's an interesting one. And in this particular case, this move into treasuries lowering the yield, despite what current rates are, is only going to drive money towards the market or into alternative classes, being either crypto or gold. For that matter. And when we look at oil, that continued decline in oil, that supports a lot of health for the economy, which is certainly not going to make the Fed want to move. You saw, an increase in oil, you'd be draining more resources out of the market. And in this case, that drop, and we already saw, Putin in Saudi Arabia is heading to Iran, and, you're certain that they're going to be discussing the price of oil and what to do to try and get it back up to those elevated levels. But this becomes helpful for the economy and takes a lot of pressure off, both from an inflation standpoint, but also from a growth standpoint. It certainly is a help, which counters exactly what you're seeing from a bond move, the euro. Fading back a little, again, we've talked about the Eurozone. It's a disaster situation for them, but that ease in oil certainly will help just a little bit to stave off a break, but dip down towards that 50% mark if we still have MBI white leading would certainly cause a break of it. But at this particular stage, DOC steel coming up from underneath, enough to give it a little bit of support right around that 50% range. And when we look at it from a gold standpoint, we had the big giant spike up, a little move back into it, but gold still has plenty more to go. And this just becomes a direct result of the deficit spending, and that there's just no other way around it. And from a more volatile play, that has led to the big move in crypto, particularly here. Bitcoin been the leader. That's something we've talked about. I mean, this is just pretty darn clean. And when you look at that DOC, that just it's not stopping at any particular point quickly. However, you do see MBI red spiking up over that 13. Now, I can sustain that, and you can see this where you get that move kind of that just gets up there and just stays. And people call that overbought. Well, I don't call it overbought because we know that with the sign in the red, it's not overbought. When you get a divergence where you're still up there and you have a DOC spread that takes place, well, yeah, then we can say there's a divergence taking place and look out. Hasn't happened yet. ETH been a significant laggard relevant, relating to Bitcoin, but nonetheless, also very strong move from where it was. I mean, these are pretty good sized percentage moves, relatively speaking. So when we look at it from our 50K standpoint, we had that MBI spike here that didn't reach the 0%, came back. We had another spike and still just barely breaking below the 23%, but it just took a matter of getting that crossover right there, and it took that short and followed it all the way down. And this is what I was talking about, the intraday plays that are still available, both long and short, that provide lots of opportunity to see the weakness start and grow from there. And whether those continue or not is just a matter of following what we get from the readings, but a pretty significant move from a shakeout. So there was just a lot of bleed. When you look at that DOC red, just complete collapse right there, and shorts pretty much took advantage of this move, and really were able to make I wouldn't call it a significant move, because all we've done is just gone back within the same range, and that's relevant to the daily chart, not anything critical. But this 45.50 becomes, that 45.45 on the daily, significant. You would start breaking below there, and you could start seeing a lot more momentum from that standpoint, particularly when we're looking at those daily readings. And I think it's relevant because, we were talking about volume in that, and how, like even the other day, I was showing that it was pretty strong from a pre-market. Well, once again, huge volume here already in the pre-market activity. And then when the day opened, we accelerated. So this is quite a bit more activity than we've seen in quite a while. And every one of these MBI white spikes intraday 5K chart all led back to moves to the 0% and even carried through. And we're still continuing to see that even here in the post market. It's a little bit softer action so far this morning. In the early pre-market hours, not as much activity as we saw in the last couple of days. So it's interesting to see this adjustments in the amount of trade volatility as they're looking for weak points. And I think that as we get to that 45.45, that's where we're going to start to see a lot of action. And we'll know whether or not the new fund money that's come in will be starting to get applied to the market as we approach that, because that is where institutions that are going to be looking for, do I have enough discount or do we need more? And my guess is that they're probably going to look for more, simply because they've created enough excitement at the prospect of building things up and how bleak things are, that if you can get enough of a trade one direction, then they can counter it, and that's all that they're looking for. But there's a lot of mixed signals from an economic standpoint, and I think that's just, like I said, going to generate a lot of that volatility. And at this particular stage, all the gloom and doom versus all the hype to the upside of the Fed cutting, just more, again, of the same nonsense. Everyone's wanting to predict some massive thing happening, but for now we're sort of just in a muck period, and you just take advantage of what the readings give us at this particular stage. And that's why I still say, the shorter term plays are a little bit better at this particular stage than the longer one. However, that daily starting to make a little bit of an adjustment. You just have to see that DOC from a daily, at least from the side, I'll put it back up there. Need to see that DOC spread take place to really have confidence that there's going to be a sustained short. For now, I mean, if this were to continue, your best is just to look for move towards that 76% Morganacci. But good chance, though, that 45 can break, given what we're seeing from these readings. So we'll definitely keep an eye on anything relevant, though. I will certainly put up on the Skype chat for you. So it's starting to get exciting. As always, though, trade well. We'll talk again later.